Hello and welcome to the Spark Accounting Solutions Facebook Live and Twitter Live show. Julie, it's so exciting to be here with you today. We've got an interesting topic today.
Yes, we are talking about borrowing money. Businesses, a lot of times as they're growing, they need more money, but nobody knows exactly what they're getting into sometimes the first time they're borrowing and what they should be worried about.
Right.
So we're talking about it today.
We're talking about it because nobody wants to go to the bank and be embarrassed that they weren't prepared.
Exactly.
Right.
And I'm super excited that we have smart people from the bank that are actually going to share with us today as well as just us.
Exactly. Well, especially as just, I think you could actually speak to it, but I think, why not just bring some experts in who do it all day long?
Exactly.
Yeah.
Exactly.
So who we have joining us, we have Justo Fuentes. He's the VP of Commercial Relationship. He's the Commercial Relationship Manager from Columbian Bank, and his colleague Kendall Shelton, who's a VP Neighborhood Manager. And so we're going to go ahead and bring them on. Welcome to the show.
Hello.
Hey.
It's really great to have you.
Thank you for having us.
Is this your first time on Facebook Live? I just got to know.
Yeah.
Oh, yeah.
Wow.
Apart from maybe trying to dabble a little bit myself and not doing very well at it, but yes.
But don't you TikTok?
No, not me.
Because I want to see that TikTok. Let's go there. Forget this show. Okay, perfect. So let's go ahead and jump right in and talk about the 5 things a small business needs to know before they borrow money. And Justo and Kendall have created the top 5 most important things you need to know. So let's go ahead and start. Who's going to kick us off talking about the purpose of funds and why do you need the money? What does that even mean?
So often what happens is, somebody comes in, asks for some money, right? And the reason this is an important question is for 2 reasons. First, the bank wants to know, right? And that's going to be a determination whether they give you the money or not. And secondly, it's really good to know, does the business owner know what he needs the money for? He or she needs that money for. And oftentimes what we find as bankers is that there's maybe a perceived need or problem within the business. And sometimes business owners think, well, throwing money at the problem or issue is going to solve it, which is sometimes not the case. And I have a real quick example of this. Recently, a client came in for a line of credit because of cash flow problems with the ARs. Well, we found that their AR days were just really long, upwards of 60 days. And the industry standard for them was 35 days. And so we determined, even if we gave them that line of credit, they were going to run into an issue again sooner rather than later because of not addressing their AR days, their account receivable days. And so really getting down to what's the purpose of the funds, why do you need them, is really going to help you ascertain the real need. And that's what you really need to find out is what is the real need here. And hopefully, your banker is helping you to do that. But that scenario I gave is just one of many in knowing why do you need that money.
That's a really good example. And Julie and I have been doing these shows for quite some time. And as you were talking, I was thinking, well, that person clearly didn't work with Julie Babcock-Hyde of Spark Accounting Solutions because they would not be on a 60-day, like as a profit first professional, like that's what she coaches on. So I was like, all right, we know that wasn't one of Julie's clients. Anyway, it's going to be funny if you guys jumped in and go, no, it actually was. That would be embarrassing for me and everyone. So, all right. So let's move on. Let's move on. Thank you for that great explanation, Justo. We're going to move on to number 2 and get even more information. Number 2 is know your financials.
Yeah. So the reason we put this one on the list is because honestly, when we're working with clients, we're trying to figure that out about what their need would be. So once they've got the need and we're really starting to dig in to find out what's possible, a lot of times what happens is, we're just looking at numbers on a page a lot of the times, right? So we're looking at your profit and loss statements. We're looking at your balance sheets. We're trying to look through tax returns and really just having the conversation and making sure that the client knows really kind of in depth what they have going on in their business helps us. Because the whole job that we have as bankers is we're here to advocate for the client. We're here to advocate for them through the loan process and make sure that our credit administration and the group that approves the loan is actually comfortable with being able to do that deal. So a lot of times what happens is we'll come with questions where maybe we see things that have changed differently over the years or different trends or things in financials. And when businesses are able to really be able to have that conversation and be able to know why things are happening in their business and what's going on, it helps us to be able to really make sure that we're presenting the best picture and we're able to get the best thing for them. The other thing, honestly, is just really kind of understanding like what's in the business credit, where business credit, I mean, there's really not a lot in there unless there's negative things, but just understanding that your business has good credit and has had a good credit history, but then also just understanding what's in their personal credit history as the business owners too, to just know that that stuff is looking good so that we have no kind of issues or anything like that there, but also working through those if there are issues.
Okay. All right. Really good. Julie, when you hear know your financials, what comes to mind with the work that you've done with your clients?
Well, I think a couple of things that I've seen when people are trying to get loans, we will sometimes get referrals from bankers because people come in with their books a mess and they don't even know that they're a mess, right? Have you guys seen that before?
Oh, yeah.
Yeah. So, so one of the things that we like to make sure is that, number one, you do understand those numbers. I always like to say, accounting is the language of business. We all know that, but not everybody speaks accounting, just like everybody doesn't speak Spanish and French. So it's really important for business owners, as we go through talking about understanding your numbers, that you're working with somebody that speaks that language that you speak to help you make sense of your numbers.
Really good. That makes so much sense. I don't speak accounting. I'm just going to fess up right now. Kendall, what's the difference in experience for you as a banker and for the customer as they walk in when they have their financials and they know what's going on, when they walk in with it?
Yeah, I feel like if they come in prepared and they have what they need, it makes the whole process so much smoother. There's a lot less back and forth as far as, if something doesn't quite match or if we're looking at one thing and they're saying something else. And it's like, it can tend to be a lot of back and forth questions. It can, and not to say that it won't be the same result as far as like doing the loan.
Right.
But it just makes the loan process a lot smoother and can actually shorten the time period that it takes to get a loan done if we have everything we need up front.
Well, and I think that's good to know because just as a consumer who isn't in the financial industry, it's intimidating to walk into a bank and ask for a loan, right? It's intimidating to walk into a CPA office and start talking about your money and, all the things. And so this is really good to let people know exactly what they should be doing. Let's just go ahead with that and go on to number 3. Here's the other thing: business loan terms, structure, and cost. Again, this is something that isn't familiar to most people.
Well, and that's true, because a lot of the times when you go into a bank or a credit union and ask for a loan, basically you fit within their parameters of the type of loan that you're looking for, a line of credit. So, for example, on a line of credit, though, if you are working in a specific industry where your business cycle or sales cycle might be a little long and they're trying to put you on a line of credit that has monthly interest payments, and you only get paid, like, for example, an ag farmer, you only get paid maybe in a certain period of time of year, well, that may not work for you. So, working with somebody who really knows your business, your industry, can tailor something to you is really going to work well. Sometimes, people don't think about how structure can really affect your business in borrowing that money in those repayment terms. And so, I don't know about you, Julie, but to me, just a cookie cutter doesn't always work for every business.
Yeah, it's very true. And people really need to be looking at, as they're considering lending and evaluating their loan options, what's going to match up with their cash flow so that they're able to make those payments and they're able to get the loan that they need. And so that's a really good point, is understanding when you need the money and when you can repay it as well is going to be helpful, so that you've got bankers that can work with you and help you figure out the right loan for you.
So, and I would just put, if your bank or credit union is asking you those questions as far as your sales cycle, or how they can structure something that fits your need, it can really be a hindrance to your cash position in your company.
I want to go back a little bit, Justo. You were talking about structure, and for me, I'm like, business loan terms, I get cost, I get structure. Specifically, what does that mean to just the average business owner?
Yeah, good question. So, like, for example, one that I had here recently, we did a short-term line of credit for some parts that they needed. And, sure, we could have structured it for a year line of credit, but they only needed the money for 90 days. So we did a 120-day line of credit for them, for that one specific piece of those parts they needed. And so it worked out great for them, and they'll pay that off, and it'll work great. It'll be wonderful for them. So, being able to, make terms that fit for the need, for the client, is really something that people need to be aware of.
Okay, perfect. That's very, very good. All right. Let's go on to number 4, know your options for funding. Options. We like options. What options do we have there, Kendall?
There are a ton. That was kind of part of our thought on making this a point, is the fact that there are so many different ways that you can receive funding. We have things like, there are banks, obviously. I'm kind of preferential to that because, that's where I'm at. But, there are so many other options out there, too, that if a bank is not the right fit, being able to research those things and make sure those other things are out there. There's things like SBA, like when to get the Small Business Administration involved, and how to utilize kind of those guaranteed funds that can maybe help banks feel a little bit more comfortable with things. If there's not collateral or things like that involved. There's even credit unions. And credit unions, they are regulated a little bit differently than banks, and they can actually do a few different things than what we're able to do. So sometimes the fit for the client is actually just finding something like that that might fit better with what they have a need for. There's also alternative lenders out there. So there's sometimes businesses who are either startups or are newer to the industry, or are just kind of needing short-term funding, or things that maybe might not fit within a normal bank box. And so we work with a lot of alternative lenders, like one of which being MoFi. They're fantastic in this area. And they can do a lot of things where they help people kind of transition from that phase where maybe a bank can't help with the lending structure right now, but maybe down the road, after MoFi works with them, it can kind of work to that. And finally, there's even private financing available a lot of times. So we work with a lot of clients who maybe, if they're buying a commercial building or things like that, where the sellers will actually carry the note and will actually finance it for them. Or sometimes there's people out there that just want to act as the bank and want to do their own notes and invest their money that way. And those can be really great options too. So it's just kind of knowing what might be out there, and kind of doing some research to know what might be a best fit. But also, if you have a banker, you want to get the banker involved early, because a lot of times bankers will know some of those options too. And so we can maybe help steer the conversation the way that it needs to go. But yeah.
Very cool. Julie, how much how much are you involved with your clients who are seeking a business loan when it comes to options?
You know what? We love to help people explore and help people evaluate their options. What we don't love to have happen is for people to not plan ahead. Because we see businesses that get into trouble and they just keep kicking it down the road. And then all of a sudden, one night at midnight, they're trying to get a loan so they can make payday. And you are not going to get the best options if you do that. So when you start identifying a need, it's a good idea to start exploring this and doing the research and talking to your banker and looking at these other options that are out there. Because when you're down to midnight the day before payroll, you are not going to get the best option. And so I really like this comment that there are options out there. I also like to remind everybody this. Our friends at the bank really prefer to lend when you don't totally need the money, not on midnight the day before payroll, right?
Well, when you even said that, right, about getting a loan to make payroll, it induced so much stress in me. So yeah.
I mean, and so really, like, as you're evaluating options for funding and figuring out what you need and all of that stuff, it's so important to have this to be part of your overall financial plan for your business, and to identify, hey, we're growing, we're going to need float for our inventory, or we're growing, we're going to need this new piece of equipment, and actually working this into your forecast for the year and figuring out, like, when do you need funding? How much funding do you need? So this research goes beyond just knowing your options, but also understanding, like, where you're going and what kinds of needs you have.
Love it. Love it. All right. Again, let's focus on the positive of you have options. As long as you're not waiting till midnight before payday.
Exactly.
All right. Number 5, another stress-inducing question, but it's good to know, right? If you walk in prepared, it's going to be better. But even so, what happens if you get declined?
Yeah, so there's a couple things to consider here, but know first that no banker really wants to decline you, right? We have production that we want to meet. The bank wants to lend money to the community in which we serve. And so, and there's a lot of competition out there for access to funding. So it's not like we're looking to decline loans. So there's really a couple things that you and your bankers should be doing. First, you as the borrower, if that happens, don't get mad, right? Don't get frustrated. You might think your bank is clueless and they have no idea what they're doing, and that may be true, right? But that's where step 2 comes into play. Ask why. And really, it's the why. And if you're dealing with a great banker, you'll never have to do this. They'll tell you why, and they'll give you the next steps here. So I had an example here. We couldn't do a deal for somebody, and what happened was their debt service or the income couldn't cover basically the payments. And so basically what we did is we reduced the loan amount, extended the term just a little bit, and they were able to get the funding that they needed. And so going through those different scenarios, if you're getting the bogus excuse from your banker, or they've moved on, they just don't care, then that's a problem. But hopefully they're explaining the why and things that maybe we could do to mitigate the issue or get to that yes. And it may not be, my favorite saying is, just because it's no today doesn't mean it has to be no tomorrow. And so what are the issues? Is it a credit issue? Is it a collateral shortfall? Again, can the business not service the debt? All those issues, for the most part, can all be mitigated. And we just got to figure out what's the mitigant and how do we get to yes.
And is that something that you, in your, at Columbia Bank, is that something that you offer is, okay, you got declined, but if you do these steps and kind of some coaching a little bit on what to do next and then when to return?
Exactly right. So yeah, because, especially, again, I'm going back to this deal that I just did here recently. Fantastic business, business a long time, great operators. It was just, COVID kind of had an effect on their income for the last couple of years, right? And so we needed to restructure some stuff and get it done, but we were able to get it done. Yeah, they didn't get what they were looking for, and so we're going to be doing this loan in 2 phases, right? And so we figured a way out, figured a way to get it done, and so that's what you have to do. You have to be willing to work with a bank or a banker that's willing to help you out, and figure out those solutions.
Awesome. Awesome. Justo and Kendall, thank you so much for joining us. I know that you have to run. So if anybody wants to get in touch with you, what is the best way, most direct way to contact you?
Yeah, no, so I work closely with Kendall. He's like my Robin to Batman. So I don't know about that, but
that's true.
Okay.
It's pretty close.
So you know what? The easiest way is to call, have that initial conversation as to what you're looking at. I'll give people my cell number. It's 208, of course, but it's 447-9815. Again, 447-9815. Kendall and I worked closely together on a lot of deals. In fact, we have a couple deals going together right now. So we really like to take a team approach. And here at the NeighborHub, they do a great job.
Beautiful. Wonderful. Thank you so much for joining us. And it's always easier to walk into a bank when you already have a face to put with who you're going to see. So everybody call Justo, and then you'll get Kendall too. Kendall's the bonus. So thank you so much.
And if you're downtown here on 9th and Idaho, just stop in and say hi. We're at the corner here. If you know where the Fork restaurant is, we're right across the street from the Fork. In fact, we're looking out on the Fork right now. The patio is beautiful, and yeah, it looks, the food's good over there. So I didn't mean to give them a plug.
I know. I'm like, how much, are they sponsoring you on this show? Because we need.
Julie, maybe we could work something out.
Awesome. All right.
Awesome.
Have a great rest of the day. Thanks for joining us.
Thank you.
Bye.
Bye-bye. So Julie, honestly, that was such good information.
I love it. And I think it's so helpful for people to know what they're getting into. When you start filling out loan applications, it gets overwhelming and there's all these questions and, so much paperwork to do. And it's really nice to know that there's potentially somebody on the other end of that application that's there to advocate for you.
Well, yeah, for sure. For sure. And I couldn't help, like literally the whole time I was thinking, if Julie was working with clients, they would have all this as they stepped in. And one of the things to do, and I'd actually love for you to speak on this for a second, is how important implementing the profit first method would be for people to be able to be prepared.
Well, we love profit first for many reasons. And one of those things is because it does help you know, like, how much could I actually afford for a payment?
Mm-hmm.
And think through those things. And also, like, how do I start saving up for a down payment? You can use profit first to help you meet all of those goals.
Yeah.
But I want to, the importance to me of profit first and setting money aside for these goals and for payments and for investment and equipment, but also, combining that with that long-term plan of saying, hey, next year we want to buy this piece of equipment or this piece of equipment. We were just meeting with a client this morning and kind of mapping out the equipment purchases. And, if revenue is this level, are we going to be able to afford the payment and still meet our profitability goals and still meet our owner's pay goals, and working through all of that. And so profit first plus forecasting is a beautiful way to really plan for this stuff and know what you need and what you can afford.
Perfect. I love it. And at the bottom of the screen, we have it scrolling. You can receive the 5 core chapters of Profit First free at bit.ly/spark PF book. And we'll put that in the comments as well. Julie, if somebody wants to reach out directly to you, what's the best way to contact you?
If you're on our Facebook page, click the contact us link and you will be able to reach out via email and we will get back with you.
Perfect. Awesome. Thank you so much, Julie. Thanks for always providing such great info.
Thank you. This was fun.
Yes, it was.